This podcast is episode 16, and today we're talking about something that happens far too often. You file a property claim, you wait patiently, and you think, okay, this is going to help us get back on track. Then the insurance estimate arrives. You open it, and you stare at the number, and you say, that's it? That's all I get? If you've ever felt that moment of confusion, frustration, or disbelief, this episode is for you. Today we're breaking down why your insurance estimate may be lower than expected, what might be missing, what is normal, and what you can actually do about it. Because knowledge is power, and power reduces anxiety. Welcome to the Happy Homeowners Hub Podcast, where we share real-life stories, break down the lessons, mistakes, and wins that can save you time, money, and stress on navigating your property claim, buying your first home, selling your home by owner, and home maintenance, repair, and remodeling tips. I am your host, Fred Turner, and each week I'll guide you through these 4 topics. So why do estimates often come in lower than expected? Let me start by saying this. A lower estimate does not automatically mean someone is trying to cheat you, but it also does not automatically mean it's correct. There are several common reasons estimates come in lower than expected. Number 1. The scope of damage is incomplete. This is the number one issue I see as a restoration and repair estimator. The adjuster writes an estimate based on what they can see at the time of their inspection. But here's the reality. This is only a starting point. It's not the final verdict. Damage can be hidden from the initial visual inspection. Water travels, and adjusters rarely carry a moisture meter with them to know how far it traveled. Roof leaks can spread over time as well. Damage behind walls exists, and often the full extent is not initially known right up front. Often once the work begins, you find out the complete extent of the damages. Here's a real-life example I call the kitchen ceiling surprise. I once inspected a home with a kitchen ceiling that had water damage. The insurance estimate covered drywall repair and paint. When we opened up the ceiling, we found additional wet insulation, mold beginning to form, and damaged electrical wiring and light fixtures. This increased the repair costs significantly. The original estimate wasn't malicious, and the adjuster wasn't shortchanging the customer, it was just incomplete. There were many unknown factors involved. Once we had the full picture of the actual full scope of the damages, we were able to go back to the insurance company and request additional money. That is where a supplemental estimate comes in. Also, many homeowners don't realize that depreciation is being withheld from an estimate. This is a big one. If you have a replacement cost policy, insurance often pays in 2 stages. The actual cash value, which is the total of the repair, with the deductible and the depreciation deducted. Depreciation is paid later once the work is completed. A completion certificate is signed and sent to the insurance company, and completion photos are also sent to the adjuster. Here's an example. A roof replacement cost is $20,000. The depreciation withheld is $6,000, and the deductible removed is $1,000, which is typically payable to the repair company. And for more details, you can go to my episode 6, The Truth About Deductibles, for more information. So the first check issued was $13,000. Many homeowners panic when they see that first number. They assume that's all they're going to get. But that's not. The withheld depreciation is typically released once the repairs are completed and documentation is submitted. That misunderstanding alone creates a lot of stress for homeowners. Another thing homeowners don't realize is insurance estimates use insurance pricing software. Most carriers use estimating software like Xactimate or Symbility. Those are the 2 most common in the industry. That software uses regional average pricing based on your area and the rates in your area. But contractors don't often work off of regional averages. They work off real costs. In times of storm demand, labor shortages, or material spikes, contractor pricing may exceed the insurance estimate. That gap can often create tension. It doesn't mean one party is evil. It means the insurance standard pricing models and real-world supply sometimes can differ. And code upgrades are often not included in the initial estimate. If ordinance and law coverage, also known as code upgrades, is limited or not triggered, it usually will not appear in the initial estimate. They are typically triggered if the village inspector requires them or if architectural drawings that could be required to get the permit indicates that they are required. That can make the estimate feel much lower than expected initially. This is especially common in older homes where oftentimes substantial code upgrades are required. And sometimes an estimate can be lower because parts of the claim were denied. Here's some common examples. Old pre-existing damage may be denied and not covered. Wear and tear items could also be issues. Maintenance issues or policy exclusions. Here are some common examples. Old pre-existing damage, wear and tear items, maintenance issues, or policy exclusions. That does not mean you cannot question it, but you do need documentation and facts to prove your case, not emotion. Here's a real-life story I call the undervalued roof. A homeowner called me furious about a $9,000 insurance roof estimate that he received. He had another contractor quote the same roof for $18,500. He said, "What, are they trying to rip me off?" When we sat down and reviewed the estimate carefully, we discovered several line items were missing. There was no ridge vent replacement, no flashing replacement, no ice and water shield was included in the estimate, which is often a code upgrade. The roof shingle waste factor was underestimated, and the insurance company did not provide overhead and profit. I submitted a supplement with documentation and photos to the insurance company. The final insurance approved estimate was $17,200. It was much closer to the contractor's number, and it was much more than the adjuster's initial insurance estimate. Here's the lesson learned. The initial estimate is not the final estimate. It's just a starting point. Have an experienced restoration or roofing company review the estimate and compare. And if you need to supplement for additional missing items, do so. Some code upgrade items like ice and water shield for a roof may not be initially included in the adjuster's estimate, but you can get it if you prove that it's required and if the homeowner has code upgrades in their policy. Here's another real-life story I call the accurate insurance estimate. Another homeowner received a $25,000 interior repair estimate after a pipe burst. They were upset because they believed the entire main level needed to be replaced. The inspection revealed that the kitchen cabinets were structurally sound and not damaged, and replacement was not approved for the kitchen cabinets. Only the kitchen flooring needed to be replaced, not the entire main floor. And only the lower 2 feet of the drywall was damaged and needed to be replaced, not all the walls. In that case, the estimate was accurate. Not every lower estimate is wrong. Sometimes expectations are based on fear and not facts. So what can you do about a lower estimate? Let's get practical here. Here are 5 strategic steps to follow. Step 1. Read the estimate line by line. Yes, it can be boring and it can look like a foreign language. Get a professional to review the estimate with you to see if there are any missing items. Look for missing rooms, missing light items, incorrect materials, incorrect measurements, items marked detach and reset that should be remove and replace, and overhead and profit should be included in complex estimates with 3 trades or more. Step 2. Compare it to your contractor scope. Not just the total price, but compare the line items as well. If your contractor's estimate says replace all base trim, but your insurance estimate says replace part of the base trim, that's a scope disagreement, and that can be resolved with documentation to prove exactly what base trim was damaged and in need of replacement. Step number 3. Supplements are normal and they're part of the process. When submitting a supplement, provide the following: photos of the damaged items, contractor documentation, and building code references if needed. A calm professional tone works much better than an aggressive tone. Step 4. Understand your policy. Know your deductible, your depreciation, which is the age of the items being replaced. Know your coverage limits, your ordinance and law coverage, also known as code upgrades. Some low estimates can be policy limit issues. For example, if you have a basement with a $20,000 limit and the contractor's estimate is $24,500, that's not the insurance company's issue, as you have reached the limit allowed by your policy. Step 5. Consider expert help if needed. If the claim is large and very complex, your options may include an experienced restoration contractor or a public adjuster, an appraisal clause, or a legal consultation with an attorney in rare cases. Most claims can be resolved through documentation and communication. Here are some final thoughts. When your estimate feels low, pause, review, document, communicate, escalate, or supplement calmly if necessary, and the loudest voice does not win. The most documented voice often does. If you want a step-by-step breakdown of how the claims process works, what depreciation means, how supplements work, and how to maximize your property claim from a preferred vendor's perspective, check out my book, The Happy Homeowners Handbook for Navigating Property Claims. You can find it on Amazon.com in paperback and in digital formats. It's written specifically to help homeowners move from confusion to confidence. For more details, go to my website, happyhomeownershub.com, or check out the show notes. If you're currently in the middle of a property claim and you need some one-on-one guidance, I also offer property claims coaching. See the details in the show notes or at happyhomeownershub.com. If you're interested in receiving the Happy Homeowners Hub newsletter, which features practical homeowner tips, claim insights, and behind-the-scenes education delivered straight to your inbox, go to thehappyhomeownershub.com, click on the contact page, and type in the word newsletter in the message box. Here is the Happy Homeowners Hub podcast disclaimer. The information provided in this podcast does not and is not meant to be considered as professional or legal advice and should not be used without consulting a legal professional. Thank you for joining me on this episode of the Happy Homeowners Hub Podcast. My goal is to make your homeownership journey smoother, smarter, and way less stressful. If this episode helped you better understand why property insurance estimates may be lower than expected, consider sharing it with a neighbor, friend, or family member who may be going through a claim. Remember, knowledge is power, and prepared homeowners often experience less stress with fewer regrets. I've got some great stories, tips, and occasional guest experts coming up in future episodes, so stay tuned. And remember, your home is your biggest investment, so be smart from the start. Thanks for listening. I am your host, Fred Turner, and I'll see you at the next episode. Have a blessed day. Goodbye.